Hi, everyone. My name is Marjorie McPike. I am the host of the CPA Lady podcast. I am a CPA in Southern California where I focus on accounting, tax, estates, and trust, and educating individuals on generational wealth. I have a passion for helping people, for seeing people succeed, and this is just another opportunity and avenue for me to be able to bring that information to you, connect you with like-minded people, connect you with valuable resources that is going to allow you to go to the next level. So today I have with me Mariah Street. She is an attorney in North Carolina, and she focuses on estates and trusts. Am I correct? And I
Yes.
will let her tell you all a little bit more, a lot more about herself.
Yes. Awesome. Okay. So, hello. Thank you for having me. I'm Mariah Street. I am the CEO and founder of Legacy Street Law. It is a modern, down to earth law firm based in North Carolina. And we primarily are focused on helping, especially family owned businesses, to establish a legacy plan and to leave wealth for their children's children. So yes, I'm very passionate about particularly helping like the entrepreneurs and CEOs of our community, especially particularly within the Black community, because these topics haven't been, discussed, and we've been kind of left out of the conversations, for obvious reasons. So I really want to be a source of, education, that people can come to, and I talk like how I talk here on this podcast, here anywhere. I talk in normal language so that people can understand. I don't talk above people's heads. I meet people where they are. So yeah, this is definitely something that is very important to me, and thanks for having me on.
Goodness, this is so awesome. So tell me, how did you get into legacy law? So what was your law journey like?
Yes, oh my goodness. Okay, so okay. Well, I'll start with why I kind of got into this line of work. So I started to really realize how much of a, I don't know, how much of a gap of education there was within our community when, this kind of hit my own family. So um years ago when I was in college, my mom actually unexpectedly passed away. She was seemingly healthy, all of the things. She was actually only 46 when she passed away, so very
Sorry
young.
to hear that. Wow.
Yes, very young. And she, of course, like many people within our community, didn't have any type of a plan in place. And so, that meant that, of course, North Carolina law or state law determines where your things go when you don't have a plan. So that meant for my family that everything ended up going to my dad based off of how things were set up and blah, 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 all of that. But that meant that neither I nor my brother didn't see anything from her assets or estate at all. And I know that had my mom like sat down and done planning, that would never have been her intent for her to not leave me or my brother anything. I was an adult at the time. I was in college, so I was, legally an adult. So, and I'm sure she would have wanted me to, have some money to finish college, to if I wanted to start a business, do all that. If I want for a down payment for my first home, like I know that those are the values that she had. But of course, when we don't intentionally make a plan and get it down in place, then our intentions unfortunately don't match reality. And
Mm.
that's what I mean. We think that, oh yeah, things are gonna go work out, or my family's not gonna fight up. Yeah, you don't know what is gonna happen. You have no idea. You have no idea. The only thing that you have control over is what you do.
Right.
So if you don't have a plan, then you are also intentionally making a decision that I'm just going to leave it up to the forces, whatever, to kind of deal with it. And so
Mhm.
that's kind of what happened for me. And then I was like, I'm really going to try. From that point on, I was like, when I went to law school, started law school, and I was trying to figure out, I still didn't really know what I wanted to do when it came to my career. And I started to get into estates law. Estate law was actually a required class for us. So when I took it, I started to realize, I was like, oh, this is what happened. This is what happened in my family. I didn't know. Because I always wonder why I didn't see any money at all. Because I was young, I didn't know, so like most of us, we don't know. And so when I learned, I was like, oh, so my mom didn't have a plan in place. So, oh, this is what happened, And so I was like, okay, so I'm going to, I started to kind of get involved into our wills clinic, our pro bono clinic, and I really enjoyed it. So from then on, I was like, okay, I think this is probably what I am definitely interested in doing. And so years later, I had a couple of jobs outside of law school that, one job in particular that didn't really have anything to do with the state's law, but I was an associate at a smaller law firm, and I actually ended up bringing, estate planning to their practice. So that kind of gave me, the practical application of all of that and help people that way. But then I decided, after working for other people, I was like, I'm going to do this on my own because I wanted to do it my way. And, again, I was really passionate about helping our community specifically. So I knew that if I wanted to do that, I needed to be the boss of this. And that'd be like, this is what we're going to do. This is what we're going to do. Because unfortunately, the law is very old and white. Okay. So only 5% of attorneys are Black and 2% are Black women. So
that's interesting. That's a very interesting statistic, because that's similar for accountants or CPAs. Less than 1% of the CPAs are Black.
Right.
So you can imagine what the percentages of women.
Oh my goodness. For sure.
Wow.
Oh my gosh.
Awesome. So, wow. So in your situation, so it had to go through probate, and then everything just went to.
Yep, my dad.
Your dad.
Yeah.
Okay.
Exactly.
Wow.
And I wasn't super involved because I was a little young, and my dad kind of handled everything, obviously. But I do remember though him kind of talking to me about it, and he mentioned several times how stressful it was. And he was like, to this day, he was like, I never want to have to go through that again. That was the worst experience that I had with, having to deal with that on top of having to grieve a significant loss unexpectedly. Right. And so yeah, he had to go through all of that. But then, after it was all said and done, whatever was left after, creditors, if that was, thing, after creditors took their share, then whatever was left went to my dad. So
right. And statutory fees for attorneys and for the probate.
Exactly. Right. Administrative fees, all of that. Yeah.
All of that. Okay. Yeah. So just kind of, because the goal is to bring education. So, knowing that situation happened to you, and my sincere condolences, because that must have been, devastating to have to leave lose your mother. And she was at such a young age. It's like, I won't tell my age, but, but I often think about that. But
yeah.
Sure. So how do you recommend for someone now? How do you recommend that they prepare? Because we know that it could happen unexpectedly, and it's not like it used to be before, where you have until you're 80 or you're 90. Even with COVID, where people were passing away at 20 and 10, or 20 and younger ages. So what do you recommend for people to do?
Yes, at a minimum level, like just starting out, I would just recommend writing down, or we live in the age of technology now, but maybe get a Word document up and write down what you own. Like write down everything you own. Like go through, like literally comb through. It's just as if this is an extension of financial stewardship and financial, education. Like how it's kind of becoming a thing now to talk more about money and budgeting. This is an extension of that. So if we're going to be serious about, budgeting our finances, then at this, and knowing how much debt we have and all of that, then you should also know what you own. So write it down as you would a budget. Write down everything you own. Literally comb through what bank accounts do I have? Checking and savings. Where is it? Can I access it online? What are the username and passwords? Keep them somewhere in one spot so that you know what you have and what you own. Retirement accounts, are they with your employer? How can I access them? Again, like your if you have life insurance, who's the policy with? If you have a brokerage account, is it with Fidelity? Like, right, whatever those are that you have, literally just write it all down. Your home, and know how much. I look every year just because I think I'm a numbers person. I just kind of like the financial like planning and strategy of it. So, I like kind of calculating like net worth and stuff like that. But anyway, but just like if you own a home, then keep up with how much it's worth every year. How much is left on the mortgage? Can I access the account online? How? What's the username, password? Like all of these things, you should know these for every single major asset that you own. Like that's the first step. No, like know what you own.
That's good. That's good. There's someone. I'm gonna drop a name. Elena, the Organized Money. I don't know if you've heard of her, and she does a money on a page, I want to think it's called, but where it's like you list all of that information, and she does it every month. Every month, but she's just in the whole budgeting part, so that's very good. And then I'm actually supposed to be working on a paper for an article for a publication here, and that's one of the things that we were going to talk about, because it's like how soon do you start, and what can you do at such an early age, and how do you start to have that conversation? So we have that, write down what you own and all your usernames and passwords. So then it's like, okay, so what's the next step? Do you like just kind of just write down your wishes or what you wish would like for things to happen, or maybe the beneficiaries?
Yes, absolutely. That kind of would go with, the information with the account. Like, do you have beneficiaries named? Who are they? Do you have alternates named? All of that should be, all of that should definitely be recorded. And, I would kind of say after you get that together, maybe kind of start thinking about, who do you want to leave things to? Like if you were no longer here or something, you're in the hospital or something, like, who you want to manage those things while you're in the hospital, just kind of preliminary think about these things, because it's always helpful. Because I always say, definitely please try to seek out a professional to help you. There are so many who are willing to at different investment levels and things like that. Like you will be able to find somebody who can help you for sure. I know without a doubt, because I know colleagues in my field who can help at all levels. So, but when you preliminary think about these things, and then when you do go to, like an attorney to kind of lay these things out legally to make sure that it's legal and everything, then you're not overwhelmed with having to think about it, because then you got your information of what you own. You kind of preliminarily know what you would want to have happen, and then that's where your professional can come in and strategize with you and say, okay, based off of your goals, what you want to have happen and what you own, then here's what I recommend that we do. And we're going to put in, we can put in this, save taxes, bring in a CPA here. Like it makes it a lot easier when you know what you own. You kind of preliminarily know what you want to have happen, your goals, your planning goals in the future, and then you can kind of help, your attorney can help you with all of that. And I would say this, because a lot of people don't also include this, but I find it very helpful when clients come in and they know why they're doing this. Like, why are you doing this? I don't want anybody to come into my office saying, oh, well, somebody told me that I should be doing this. No, like there should be an internal motivation within you to do this. I don't want you coming in my office if you just think this is just something like, what's the actual motivation behind you doing this? Mm-hmm. Like, what is it? Are you like, what, at least I'll say for myself, of course, I didn't come from a super, my family did well. We're, middle class and everything. But didn't come from obviously super wealthy family or anything like that. But, my goal is to build generational wealth when I am, I'm currently not married yet. But when I do have kids, like that is something I desire for my family. I desire for us to be wealthy. I desire for us to be wealthy so that my kids can be able to have opportunities that might not have been afforded to me, and their kids can have opportunities that weren't afforded to them, so that it stops the cycles of poverty, especially within our community, and all of that. But I want to instill the principles of financial stewardship and generosity within my family, and that's my why. So it's like, what's yours? Like you need to know this, because it also can really help whoever's helping you to really put in place some tools, some legal tools, some financial tools to help you accomplish that. Right. So don't be in here and just be like, oh well, it's just, I feel like somebody told me to do this. No, like you need to have your own motivations, and you need to be able to articulate them. I think it's helpful.
That's good. So when someone comes to you and says, I just want to be able to, it's generational wealth. It's like, that's not enough. It's like, so how do you implement the generational wealth? How do you pass it on? What do you tell them when someone comes into you and that's all they can say? So does it go back to the why, or does it go to the next step?
Yeah. Well, it most of the time, at least in my experience so far, people will kind of, talk. A lot of them have kids, so that's a major that's a major motivator. And so, we'll try to, create a plan for them based off of, maybe what they want their kids to experience, and whatever the case might be. It's definitely all very personalized. At least, I don't believe in a one size fits all thing. Mm-hmm. So I sit down with people and kind of, look at what they own. They tell me what they would like, preliminary, see what would have happened. And, then we can kind of strategize from there. So it's definitely not a one size fits all thing. I have to get to know the client or whoever first before I can even start recommending anything to anyone. So,
okay. Yeah. So you have the first plan.
Yes.
So can you tell us a little bit about that?
Yes. So I have created this proprietary plan that we have at our firm, and it's basically a plan that not only, like I said, it's customized based off of what my clients' goals and things are. So we'll of course create all of that, whether it's trust based or whatever the case is, based off of what they desire. And then we also have a component of the plan where we pass down their intangible wealth. So, we think of wealth in terms of money all the time, but the fact of the matter is that wealth is, of course, way more than money. And so I really want to be able to have my clients to pass down like their beliefs, their faith, their values, their intentions behind planning, their anything that they want to kind of instill in future generations, or they want to let future generations know who they are as an actual person,
Mhm.
that is kind of the piece that I really love to do. We do an interview, which is super, super exciting. And I actually have some exciting things coming up with that for my future clients. So it's going to be a whole thing, a whole production. And I'm just super, super
Um,
excited that they'll be able to, really pass down what they believe and like their values. And um, every time I do the interview, I always get almost a tear out of people because it's like you're thinking, about, you know, who you are, what you believe in, and how that translates into maybe your kids, and every single time people are like, oh my gosh. they're, they're like, when you ask me X question, I almost cried. Like,
wow.
and so, it kind of, it informs the whole plan because yes, money is important. I'm not saying that because it is.
Mhm, mhm,
Or getting your financial house in
mhm.
order and all of that, that's very important, and it's a piece of that, and we plan for that. But also, we are more than that, and we believe in things, and we desire for our kids to have certain values as well, as parents or what have you. And so I kind of want to be able to encompass that in my plan because I wish my mom had done something like that. I
Mhm.
just have some CDs of like voicemails from her that I
Aw.
put on a CD just so I could like hear her voice every now and then. But how powerful is it to have an actual interview of your parents telling you what they desire for you as a person and
That's
values going through
awesome.
life.
That's awesome.
So that's what that is. Yes, absolutely.
That is awesome. Oh my goodness. My father is 96 years old,
Ah,
and we laugh about it. Every once in a while, my brother will send a video, or someone will, he'll be sitting there, kind of ranting or whatever, and someone will take a video of him or whatever. But it's like, that's awesome. It's like, I think I'm going to be intentional with my time now and start asking questions and recording them. You know,
absolutely.
I mean, 96 years old, it's like you've seen so much, and it's the intangible. It's not so much, it doesn't have to be the money. It's the fact that, you know, you went into the military when you weren't supposed to, and someone had to sign for you to go in, or you snuck in, and you worked in the military for 20 years, and you went civil service, and you raised your kids, and yeah, oh my goodness,
Yes. It's so important. It's so important that we do that.
that's
And
awesome.
because it kind of makes your plan, it makes it complete. It's like the missing puzzle piece. Like
Hmm.
you create this estate plan or legacy plan or whatever. And it's like, okay, yes, I can kind of see what you're trying to do, but it's better just to have somebody explain it. Be like, hey,
Right.
this is what I did and this is why
This is
why.
why I did it.
And this is what I desire for you to do. This is why I set it up this way. And then also like we were talking about, passing down those experiences and beliefs and faith too,
Hmm.
because
Hmm.
that's an important, very important piece of
Right.
legacy.
Right. Okay. So is that what the first stands for? So those are acronyms. Can
They
I?
are. Yes, yes. So
Acronyms.
it addresses all different parts of our legacy that we tend to leave behind. So the F is for financial, so that's your money and assets, of course.
Mhm,
I is for intellectual, so maybe you have some intellectual property, maybe you have some trademarks, maybe you have some values surrounding education
mhm,
and whatever that you want to pass down, whatever that is. And then the R is for relational, so your family, what your, of course, if you have kids, and even if you don't, you sure you have family or friends that you really care about. And of course, we do plan for all of the important people in your life. And then the S is for spiritual,
mm,
because I am a woman of faith. And so, I like to include that into, if the person is believes in something or faith or whatever, that, they're able to pass that down, those types of values and beliefs as
Mhm.
well.
Mhm.
And then the T is for trade or business. So if you have a business, which is primarily what I love to do in my practice, is for business
Mhm.
owners. So we do
Mhm.
business succession planning and making sure
Mhm.
that your business is sound and secure, so that
Mhm.
you're able to really leave the legacy, especially if you really believe in what you're building in your business. Because a lot of people, a lot of people really care about what they're doing in their business, and they believe that they're making, we work with people who really believe in what they're doing in their business. Like, they really are trying to impact people, they're really trying to serve people at a high level, and they want that to continue on even after they're gone. So that's where that planning comes into play, to make sure that it keeps going after them and provides for their kids as well. So
Right, right,
yeah.
right. Okay. So I like it because it's not all money.
Yeah, no, it's not.
Usually
It's
when people start thinking generational wealth, they think money,
right.
you know?
Yep.
So
Money. That's it. That's it. And it's like, if you don't have the knowledge and the education to pass down with it, then you're not going to know what to do with it. They say that, I think after the second generation, money is squandered, or after that. Like, so that's because we're passing down, you're passing down the money, but you're not passing down the financial stewardship piece that needs to be passed down with it. So
are the values and the standards that made that money. You know what I
right,
mean?
made that money, exactly.
Right?
That made that money in the first place. So it's
Right.
important. It's too important. You have to do it. Otherwise, they're just people are just gonna be like, "Oh, I got all this money. Okay, let me buy a nice Lamborghini or something."
Mhm, mhm. I
Yeah.
like that. I like that. And we come from such we're a resilient culture.
Yes.
Um, I want to say where we have to persevere. So it's helpful to know that history in order for us to continue to carry on that legacy, because none of it was made easily, right?
Oh my
You know,
no.
it doesn't come easy for us. So it's
It doesn't.
important that the next generation knows what was required in order to generate that.
Exactly.
Awesome. Okay, so but let's talk dollars, because
Yes, let's do it. Let's do it.
we have to get to the money part of it.
Yes.
Um, so, so for a new business owner or someone that say they became a millionaire, they made their first $1 million in 2020. What would you recommend that they do, or what types of things could they do in order to set aside money to start that process?
No, to start the estate planning process.
But either the estate planning process or just kind of looking towards the next generation. It's like, it's like, say for instance, you make $1 million and you have a child.
Mhm.
Maybe I'm going to take $100,000 of it and put it in a trust for my child, or something like that.
Yeah,
So then
absolutely.
that way, and put it in the name of the trust, and maybe use the trust name to purchase like a stock or something like that.
Yeah, 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 absolutely, for sure. Well, again, I'll, of course,
And I know, nope,
yeah,
no, it's not one size fits all,
yeah,
but just kind of something to get people thinking about something that you can do. You know what I mean?
yes. So I would say, for businesses specifically, or a business owner, first of all, make sure that your business is legally sound. First of all, make sure that it's legally sound. So make sure that it's structured properly. Make sure you have your entity, whatever that is. Make sure you have that together.
Mhm.
Make sure you're bringing in the right professional. So you need to have a CPA. If you're making $1 million in your business, you need to have a CPA in your business. Okay. Um, you definitely need to have that together. Um, and obviously making sure also, if you're doing any type of business, you need to have your contracts in place. You need to make sure that if something were to happen, that your business is protected, because one wrong thing, you don't have the right contract in place, you don't have the right provisions in the contract in place, and you could lose the business. So you could easily lose it. If you get sued, for example, and the lawsuits are very expensive, and if you don't have enough money, it's the whole thing. It could happen, and it happens all the time, because people, just we start the business, and then we don't think about getting the foundations together. So I always like to say, especially if you own a business, you want to be sure that the foundation is right, before you even start thinking about passing it down anywhere. If it's not legally sound or anything like that, you're passing down a mess. So you need to start there first, making sure you got the right people on your team. Yes, and then when you are ready to start the process of not even just are you ready, because you need to plan for these things anyway, but regardless, you of course would seek out somebody who can help you with your business succession plan, and they'll help you kind of take a look at your business specifically and your goals, of course. And if you're in partnership with somebody, what business succession planning might look like is having a buy-sell agreement. So somebody is going to come in and or you'll have the agreement together, and you'll put in place triggers. So death is a major one. So what happens at the death of one of the partners? Is the other partner going to buy out? That's kind of what that is, going to buy out their interest, and pay the money to the estate of the person who passed away, and all of that. How is that going to be structured? And how is that buyout process going to be funded? Because you have to, again, buy out their interest, so you need the money in the business or whatever the case is to purchase that person's share. So you want to have that. A lot of people use life insurance, which that's very important. We got yes, not even just in your life, but if you're a business owner, very important. You could use life insurance to your business could own life insurance policies on on all partners. And when somebody passes away, make sure all of these provisions are your buy-sell agreement, of course, but then the business would be able to buy out that person's interest easily, because everybody is insured with those insurance policies, and it makes it a little bit easier to do that. But anyway, that's kind of I don't want to get super into the weeds, but just making sure that you have all of that together based off of what the goals are. Of course, if you're a business owner, it's especially important to do your estate and legacy planning because you want to be sure that you account for if you want to pass your interest down potentially to a child, and they're interested in taking over your part of the business or whatever, or your business totally, then making sure that you name that in your estate plan specifically, as well as you want to be sure that, especially if they're older, that they know your business, that you've been, kind of training them. We talk, that's a whole nother piece of that, making sure that you have standard operating procedures, SOPs in your business, so that they can come in and easily manage it. And they're not just sitting there, they get in there and they're like, I don't know what to do. So, obviously that's another kind of outside of the legal piece, just making sure that you have a person kind of named if something were to happen to you and you do want your business to continue, making sure that you have a named person or a person in mind as to who you would want to have take over and manage the business, have them and make sure that they know, it could be an employee that you have, whatever the case is, whoever that person is, you want to be sure that they're trained appropriately, making sure that they know the ins and outs of your business to, have that all together. And so when it's time for them to do that, then they can easily just step into the role. And it's just like, I know what I'm doing, so I can, handle it. So.
Right. So with business succession planning, is there, I guess, anytime you have a business, you should think about that, not just if it's $1 million business, because if you're running a business, you should have a plan in place as far as if something happens to you, right? She's like,
yeah. Yes. I mean, just a matter of fact of what if you're in the hospital? What if you contract something and you're in the hospital? If you are the only owner and you're the like the sole owner or whatever, and you have like clients, they're gonna come and be like, where's this service that I paid you for? Where's this whatever it is that they contracted with you to do?
Mhm.
They're going to be wondering what's going on. So, that's a potential, it could be a potential lawsuit waiting to happen if you don't have anything in place. If something were to happen to you, or if you or and you don't you have no plan, you don't know who could potentially step in for that period of time to run your business, whatever, while you're in the hospital or what have you. But yeah, it's important. It doesn't matter. I don't care if you own. Yeah, it doesn't matter how much revenue you're making in your business. You need to have some type of a plan just to ensure that your business continues to run and that your clients or customers or whoever are still being served, even though you're in the hospital, because your business is still running. Like, even though you're not, maybe whatever,
Right.
but your business still is. So you need to make sure that you have to have that kind of together.
Wow. That's something to think about. And I like the life insurance piece,
Yeah.
because we have so much of a challenge just having it on individuals, but when you're a business owner, it's like it makes so much, it always makes sense, but just makes so much more sense. You know what I
Yeah,
mean? It's like it's an additional level, and um
absolutely.
yeah, and the company can pay for it too.
Yeah, it makes it super easy. Yeah. Get
Mhm.
it while you're young and healthy and all that jazz. So it's yeah. So
Right. Yeah. Okay, awesome. So let's see. So what other ways do you go about educating underrepresented
Mhm.
communities? So what else are you involved in?
Yes. So I love doing like little workshops. I don't want to say little, they're major workshops, seminars. I don't know why we got to stop doing that. But anyway, doing these workshops and seminars, across anywhere. I've done them for my sorority. Before I did it, I actually, for our regional conference, I was one of the like breakout sessions. I, did an educational seminar on estate planning, and I do that, all of that regularly across the community. So I really, also looking into start doing this for churches too. So that is, I would really, yes, I am excited about that. And I just, anywhere that I feel like we can really hear this, then that's what I'm trying to do. Just at a high level, making sure people know what they need to have in place, and what they kind of start need to be thinking about, as we go through life. Make sure we have our planning together, and yeah, know what our goals are and things like that. So
I like the church format. I'm a woman of faith, we prayed
yes.
before we started. But I've taught educational courses at my church as well. And one of the things that I'm working on is, and maybe I'll get you to help me with this, is
Yes, please
um,
do.
charitable giving. Charitable giving. Yes, charitable giving, setting up a trust. Oh my goodness, that is
That
such
is
a
my heart.
transformational wealth.
That's literally my heart. Like, I really love working with people who are charitable, because it is so fun to me. I'm like, yes, let's give
Mhm.
away this. And I mean, it's a great way to I mean, I don't want to say it, but as a tax lady, it's a great way to offset some of if you have a trust in place in particular, it's a great way to set off expenses with your trust, because your trust is an entity you have to file taxes for every year. And so, it's a great way if you have charitable giving going on in your trust. It's a great way to save on taxes for the people that you named as beneficiaries in your trust. And plus you're helping good cause. You can name your church as a beneficiary, your church, your sorority, your any organization that you find near and dear to your heart, you can name these people as beneficiaries. You can even set up a whole separate, there are charitable trusts actually that you can set up within your planning to make sure that you can keep giving every year based off of the levels that you wish. I've worked with people who have like foundations in place and they want the foundation to continue after they're gone. So yeah, that's my heart, and that I love that.
That part, charitable lead trust, charitable what is it called, a CRUT, a charitable
remainder, yes,
the charitable lead trust. It's like yes. And then so I was working on one. It's like, and they had like maybe $500,000 in there. And every year, so it went for like maybe 10 or 15 years, but every year they gave away like the income on it. They gave it away, right? So you figure $25,000, $30,000 that they're giving away to charities, right, over these years. And then at the end of it, it goes to the beneficiaries tax-free.
Tax-free.
Yes.
Tax-free.
That's what we need to get into. Yes.
Yes, absolutely. I love that. Oh, that's literally my heart. That's kind of also why I love this line of work, because this is an act of service for your family. It can be an act of service for others. If you do charitable giving in your planning, it's an act of generosity, an act of leadership. Like it's all of those things together. And so I love it when people are serious about like their charitable giving. That's definitely something I want to do. I actually want to set up foundations for scholarships and things that I'm trying to set up. So I'm with all of that. I love it so much.
I love it. Yes. That's where it is, especially, even just, you have it.
Yeah.
You've accumulated over the years instead of just living off of the money. It's like, hey, I'm going to give it to charity,
Right. Yeah. And it saves on like you said, it saves on taxes. So it's great. It's such a great way to use like the income of your trust, and just it's amazing. It's really good.
There's so many things that you can do, and so many things that we are not privy to. So we have to continue to get the information out there.
Yes. I agree completely.
We're gonna have to do a collaboration. I want to put together a seminar, and estate planning is part of it.
Yes.
I have to get it going.
Let's do it. That would be awesome. So many good nuggets to say and like educate on. Just so many. I mean, my gosh, this is the first time somebody's actually brought up like charitable giving in these, and that's something that I really love to talk about. So, and we don't, like you said, we kind of don't know this, some of the strategies that can be utilized to do that. And so, I love it. That's great.
And that's what I want to bring out is the strategies, and also even with estate planning, the strategies, to setting up, your trust. Your living trust, your irrevocable trust. It's like, I know someone that recently purchased a house. I'm like, you need to put that in the name of the trust, right? Yes. So that, especially if you have kids, it's like, so put it in the name of the trust, and then you determine what happens with it. So right. And then we used to have the AB trust, where I don't know if they still do that as much, but where, you live on half of it, and then when the other person passes away, it goes to that. And, so those are the types of things that we need to start educating people on, and have people to think about, not just living on the money for now, but how is it going to sustain the next generation?
Exactly.
And the next generation. How do we get old money, right?
Old Old money. That's what I'm saying. Old money. That's what we're trying to do. That's all we're trying to do. You're so right. There's so many strategies to utilize to do that, to help grow the money of your assets so that you can oh my goodness. So many different things. Oh my
I was in a mastermind, and I just love to drop names, but the Wealth Dad, he was in there. I don't know if you've heard of him. So he came and he spoke to us, and he was talking about how much money he needed to retire, and so we talked about that. But, we started saying, it's like, yes, you say you need $1 million in order to retire, but you're not going to spend that $1 million. That $1 million is going to be sitting somewhere, and you're going to be living off of the income, right?
Exactly.
And then when you pass, you're going to leave that for the next generation, and they're going to live off of the income. That's the goal. That's how you establish.
That's the goal. Yeah.
Right. Very cool.
Wow.
I'm going to have to remember who all I tagged in this.
Yes. I am here for that. That is amazing.
That's awesome. Yes.
Oh my goodness.
I just love getting information and passing it on. And so tell me, is there something else? We talked about a lot. Is there something else that you want to share? Any particular point that you want to bring out to stress to our listeners, our viewers? Anything?
Yes. I guess I would just say, to take whatever is the next best step for you in your planning journey of, building wealth and a legacy, like whatever that next step is, whether it is writing down what you own, just starting there, just, you start somewhere. It's okay. Like you can start at one step and then go to the next thing, figure out, why you're doing this. What is your big why behind this? Like your why, not like, somebody told me to do this. It's like, what is the reason for you? And, kind of knowing preliminarily, like I said before, like what you kind of would want to happen, what you want to happen to your assets and things like that. And just, and then of course, seeking out a professional help. We go to, like, me and you, we go to school and we get these licenses so that y'all don't have to. So that you don't have to. Okay. So take advantage of the people in your community to, help you and find the right person for you. Everybody has the right person for them. Whoever feels right to you, whoever, feels like, you feel like it is not, talking over your head or anything like that, whatever those qualifications are for you, like, find that person. You can find that person. It's like seeking out any other professional, like a doctor or whatever, the therapist or whatever, do that, but find somebody that you like and work with, partner with them to create a plan for you, your family, your business, so that it serves you. It actually works and serves you. It's legally set up. It's, you're reducing and trying to reduce as many taxes as possible. You bring on your CPA, you got your life insurance agent, you got your real estate. If you're into real estate, your real estate broker, whoever, you got these people on your team to help you. And then you can kind of start building that out over time. I know, because in my practice, I definitely try to work with the professionals that they already have. So if they already have a CPA, then we have a meeting and be like, okay, so what can we do with the CPA, what can we do to eliminate, try to, reduce these taxes that might be owed or whatever the case might be. So, to try to come up with a good strategy for that person that would work for them. So, but yeah, whatever is that next best step for you, wherever you are in the journey, just take it and take action. I know we listen to these, these educational things, which is great. It's good. Our community specifically really needs it. But don't just sit on it. Don't just sit on what you to obtain, because, even though a lot of us haven't known before, haven't had any of this knowledge and education before, the moment that you do hear this educational information, that means that you are now responsible. So that means that from that point on, when you are willingly choosing not to take action, because now you're aware. Because now you're aware. You hear this podcast episode right now. You hear this episode right here, and you are aware that I really desire to build wealth for my family. I really want to protect my family, and I definitely know I need to. We need to get this estate plan together. We need to. If I have a business, I need to make sure my business. If the moment that you hear the information, you are responsible. So if you choose to not take action, then I'm gonna be contrarian here. Not really, but it's just the facts. If something happens and you don't have any plans in place, then it is your fault because you knew the information, but you chose not to take the action. It's one thing when you don't know the information. Okay, it's another to know it and hear it, and you still don't do anything about it. So I'm just gonna leave that there. And I hope you take the next best step.
That you over there preaching. That's like being doers of the word and not just hearers only, right?
Doers of the word, please. Yes, doers of the word, like living it out in action, step by step. That's exactly what this is.
Awesome. So. That is so awesome. So do you work with clients that are not in North Carolina?
I don't. So I'm only licensed in North Carolina. So maybe in the future I'll expand out to other states, would be awesome. But yes, for now, yes, just North Carolina. So if anybody here in North Carolina, hit me up.
Legacy Street Law. Yes. So awesome. And you're on Instagram at Mariah Advises or Legacy Street Law, and Facebook at Legacy Street Law as well. Awesome. Okay. So we're definitely going to do a collaboration. This is not the last time that you'll see the both of us together.
This is gonna be good.
More together. We will.
I like that.
Awesome. So thank you so much, Mariah, for joining me on the CPA Lady podcast. Remember to subscribe, like, share, and follow Mariah at Mariah Advises on Instagram. Her business Instagram is Legacy Street Law, and reach out and ask questions. Remember, now that you know it, you're responsible to take action. Have a good one.
Bye.